Let's bring in Hennion Walsh Asset Management President and CIO Kevin Mahn. Kevin, and I was looking at your estimates, and you're kind of a little above the street's estimate for 80,000 jobs added for non-farm tomorrow. You're kind of in the more 90,000-ish range. What do you make of the labor market right now?
I think the labor market is relatively stable at this point in time, Cheryl, even if you consider the Federal Reserve's projection for year-end unemployment of 4.2%. That would essentially mean that unemployment stays exactly where it is today by the end of the year. And even if we don't get significant more job creations, so long as we're not adding significantly to the number of folks applying for jobless claims, I think that puts the labor market in a relatively safe ground. Obviously, we can learn something different tomorrow, but right now, in a relative Goldilocks type of scenario.
Especially when we continue to see the two sectors that where the jobs are getting created is healthcare and social assistance. You know, the manufacturing payroll estimate is only 4,000. Surprises me a little bit. I'm wondering if that's going to come in a little bit higher just because we're seeing these data centers getting underway, as well as we're seeing, bring America back, bring manufacturing back to the U.S., something the Trump administration has been pushing, that Micron plant that we saw. Liz Claman was up there in upstate New York. I mean, all that tells me that maybe not in this report, but I still think that number, that estimate anyway, is a little bit weak. What do you say?
I think it will overshoot on the manufacturing estimate. It's nice to have a manufacturing component of the U.S. economy again. For far too long now, we've been relying upon the services side of the economy. And for any economic growth to be sustainable, we do need a fair balance between manufacturing and services. You mentioned the Micron plant that Liz visited near Syracuse. Let's not forget about that massive chip production plant of Taiwan Semiconductor out in Phoenix, Arizona. All of this is aiding to the labor market, and all of it is aiding to jobs that are paying above average wages, which is going to only help propel the economy further, because as it stands right now, Cheryl, 70% of our economic growth still comes from consumer spending, although AI infrastructure spending is catching up.
It is. And, look, I mean, we're right through the second quarter now. We're actually coming in pretty strong. So 85% of companies in the S&P have reported their results. Yep. 85% exactly have beaten earnings per share estimates. So right now, earnings are up about 52% from last year. Stronger than expected. Your thoughts?
Yeah, I mean, how much stronger can they be? Sometimes in life, Cheryl, our best isn't good enough. And I think we're getting to a point right now where investors are seeing those types of numbers, particularly out of technology companies, and they're saying, ho-hum. But we also need to remember that the blended net profit margin for those S&P 500 reporting companies is 16% right now. That's the highest on record, according to FactSet, going back to 2009. So, yes, companies are growing their revenues, they're growing their earnings, they're becoming more profitable, but everyone is hyper-focused on what the spend plans are going forward. And if there's any hint that companies are going to start lowering their CapEx spending, well, then those stocks are getting punished.
Real quick before you go, Kevin, I mentioned this in the introduction to you, but there's this reporting that I've told you that the Fed hike, I mean, we're looking at potentially a Fed hike in September. That's where the bets are anyway. But there's this reporting that President Trump has been calling Kevin Walsh over at the Fed, phone calls about policy, about advice, really tapping into him. And, he's somebody that he did not put a dot on the dot plot. I've heard you and others say, enough with the dot plot, get rid of the dot plot. I mean, I kid a little bit here. But, if you're saying to me or anybody says to me right now that we're going to get a rate hike in September, I would push back and say, I don't think Kevin Walsh has any plans to push for a hike in September. Your thoughts?
Yeah, I do not either. And let's just remember, Kevin Walsh is only one vote on the committee, so he can't change interest rates by himself. I would also question if, in fact, they did raise rates by 25 basis points in September because of elevated inflationary pressures. What is a 25 basis point rate hike going to do to open the Strait of Hormuz or to bring down oil prices? So I think that could be a very short-sighted decision if the Federal Reserve were to decide to raise interest rates by 25 basis points in September. I think in all likelihood, they do nothing for the foreseeable future unless, of course, oil prices or inflation spikes considerably, Cheryl.
Yeah, well, and certainly that short-term energy shock is something that they're going to have to look at. And the data has showed that but then the data also shows when it pulls back, and that gives us a relief, at least on the headline number. So, yeah, we'll see what else we get. Kevin Mahn, it's great to see you as always. Thank you for being with me.